Who needs casinos when you got the stock market? When Hertz filed for bankruptcy, their stock became almost worthless, and then traders thought this could be a great way to get rich quick, so they started buying up the Hertz bankrupt stock, and then this bankrupt stock rallied 1,000%. What's up, everybody? I am Jaspreet Singh from the MinorityMindset.com, and welcome to the Minority Mindset. You know the saying, all is fair in love and war? Well, I'm going to change it up a little bit. All is fair in the markets during a pandemic. Hashtag Minority Mindset. I guess I'll just stick with finance, no more poetry for me. Some people feel that the stock market is turning into a casino. First, Hertz filed for bankruptcy, and then their stock became almost worthless, and then traders started buying up their stock trying to get rich, and then the Hertz bankrupt stock rallied about 1,000%. Second, hedge funds are getting fed up because retail investors, so your amateur regular investors making trades off of their phones, are getting better returns than the professional and highly paid hedge funds. And third, with warnings of a new potential second wave of this virus coming, you have kind of like a battle between profits and health, with the CDC saying that we might need to do lockdowns again, and then you have the Treasury Secretary saying we can't lock down again. So you got to be really careful with what you say right now, because the stock market is really emotional. Oh, don't go down, Marcus. I didn't mean that in a bad way. Let me start with something that's been really frustrating and something that I want to kind of just get off of my chest, okay? Investing is not gambling. Investing is not a way for you to get rich quick. Investing is a way for you to build wealth slowly, and the stock market is not a casino. Well, it's not supposed to be a casino. The big money, the real wealth, isn't made in hours or days or weeks or even months. It's made over years, over the long term. I mean, you can disagree with me, but it is reality, and this has been time tested again and again and again. If you really want to build wealth, you should not be trying to find the next hot stock to own for 3 hours or 3 days. You should be investing in companies that will build you wealth over time. But a lot of traders are not going to agree with me, and they're probably over there smashing the thumbs down button out of anger right now. Look, I love the fact that people have been using this stock market crash as an opportunity to start buying stocks and start investing their money and buying stocks at a big discount. I love that. But now I think it's time to learn how to do it the right way, in a way that's going to make you money and build you wealth for years into the future, instead of just something that's going to make you money for 2 weeks. CNBC wrote kind of a funny article on this. They wrote an article titled "The Hot New Way to Make Your Stock Pop? Go Bankrupt." It's kind of funny, but it's also kind of true, because companies like Hertz and JC Penney that went bankrupt started rallying because traders used this bankruptcy as an opportunity to try to get rich quick. As your random attorney on YouTube, who cannot give you any legal advice, when a company goes bankrupt, its stock usually becomes worthless. There's a few things that can happen. Either the stock will get delisted, or the stock exchange will halt trading of the stock, or the company can issue new stock, and this would render the old stock now obsolete, and all of these things would make the stock or shares of this current bankrupt company worthless. The only way shareholders of a bankrupt company can get anything after the stock is delisted is if the company can raise enough cash and make enough money to pay off all of their debt holders, and Hertz has a lot of debt holders, and then, only then, can any of the shareholders, the investors, get a penny. So why am I saying this? When Hertz filed for bankruptcy, you might remember that I made a video explaining why the company went bankrupt and everything that was going on, and during this time, a lot of traders, newer traders I imagine, came and used this as an opportunity to start buying up this very cheap Hertz stock as a way to get rich quick, because if you can buy this penny stock for 40 cents a share and it doubles to 80 cents a share, you just doubled your money. It honestly looked like a game of hot potato where the stock rallied 1,000% because you had these traders that were buying the stock and selling it and buying it and selling it and buying it and selling it, just hoping that they wouldn't be the ones holding the stock when either the stock got delisted or when the stock crashed. A potato is only worth what somebody else is willing to pay for it. And if this potato was worthless and everybody started buying it up and everybody wanted this potato, then the price of this potato was going to rally. And if you can buy this potato when it was worthless and sell it at 10 times worthless, then you just 10 times your money. And this is what traders were hoping to do: catch the potato and sell it right at the peak before the potato became worthless again. This was one of the craziest and weirdest things that I have ever seen, because in the first week of June, Hertz got a letter saying that their stock was going to be delisted. if their stock was delisted, then every shareholder holding a piece of the Hertz stock would have nothing. They would lose everything. But even that couldn't stop the traders from playing hot potato. Ah, I got the potato, catch! Now, if that wasn't crazy enough, you won't even believe what happened next. Hertz said, wait, if all of you traders, or some of you traders, can get rich playing hot potato with our stock, how come we can't play the game too? So Hertz did something that's just so weird to think about. They went over to the bankruptcy court and they said, Judge, listen, I know our stock is worthless, but can we take $1 billion of our stock, which isn't on the stock market, and sell it to traders on the stock market, even though we know the stock is worthless, as a way for us to raise $1 billion? This might sound like one of Jaspreet's crazy fairy tale stories, but it's not. And the bankruptcy court agreed to let Hertz sell $1 billion worth of worthless stock, and this was only fueled or allowed because traders started buying up a stock which was on the verge of being worthless. So Hertz is able to raise up to $1 billion by selling $1 billion worth of nothing, because there are people out there that are paying money for nothing. Oh no, I got the potato! Now, is there a chance that Hertz can come out of bankruptcy stronger, and that they can pay off all their debt holders, and that the shareholders who bought this bankrupt stock will come out stronger than they were before? Sure, but it's not just me saying that this is not a good idea. Hertz is saying the same thing. Hertz says that they expect that all of their shareholders will lose all their money by investing their money in Hertz stock, and Hertz is raising $1 billion by selling this worthless stock to their investors that they think nobody's gonna make any money on. Ooh, that's hot. Hertz has already received a delisting letter from the New York Stock Exchange, so this game of hot potato is going on and the clock is ticking, and it hasn't stopped traders yet. Hertz is trying to extend the game clock on this hot potato game because they appealed this delisting notice, because they know that the longer that they can stay on the market, the more shares they'll be able to sell and the more cash they'll be able to raise by selling nothing. But if this appeal gets denied, then everybody holding this Hertz stock will eventually be left with nothing. Now, I don't know about you, but I believe in miracles, just not in the stock market. And Hertz says that it will take a miracle for shareholders to make any money who hold on to their potato. Stock. Is what's going on fraud? I don't know. Traders are just trying to get rich quick, and they started playing this hot potato game with the Hertz stock, which created value behind Hertz because everybody started buying this Hertz stock even though it was on the verge of being worthless. And Hertz is just trying to capitalize on this new added value of their stock by selling more of their stock to people who are playing hot potato, because they're just saying, here, have another potato. I'm an investor, not a gambler. I hate gambling, so I don't play hot potato. A few people are going to come out of this much wealthier than before, but most people are going to lose everything. This is why hedge fund managers have been pulling their hair out and getting so frustrated, because retail investors, so your average investors, you and me, the people that trade off of our phones and make investments off of our computers, because retail investors have been doing so much better than hedge fund investors in 2020. And hedge fund managers are mad because they're saying that so many retail investors don't even know what they're doing. Do you remember that whole Zoom debacle that happened, where everybody wanted to own and trade shares of Zoom, the video conferencing app, because everybody was in lockdown and people were doing a lot of video chatting? And so people who wanted to make money on this went onto the stock brokerage, and then they started buying shares of ZOOM, Zoom. But what they didn't do was some research on the stock, because what they didn't realize was ZOOM wasn't Zoom video conferencing. ZOOM was a penny stock that hadn't reported any financial statements in years, and so people started buying shares of a random penny stock because they didn't do their research, and then this penny stock started to rally, so more traders started buying ZOOM thinking they were buying the Zoom video company, and then the SEC got suspicious because they were like, what's going on with this penny stock? So then they halted trading of ZOOM, and then these traders who thought they were investing in Zoom video lost their money. In 2020, retail investors have outperformed hedge fund investors, and hedge funds are saying that this has happened because retail investors are creating their own bubbles. You have this collective buying power of a bunch of people who don't understand what they're doing, and they start buying up shares of random companies, and it's just causing causing this market to rally even when it doesn't make any sense. What I need you to remember is that the common component of any bubble is the feeling of euphoria, where people start buying something not because they want to invest in something or own something, but because they don't want to miss out on the opportunity to get rich. I mean, we have some serious concerns in our economy with so many Americans out of a job and now talks of the virus resurging. This means opportunity for you, minority mindset thinkers, the people who think different than the majority of people, because there's going to be a lot of opportunity to buy strong companies at a huge discount. By the way, if you want to invest in stocks, you have to use a stock brokerage like our sponsor Webull. Webull is completely free for you to use, and they are giving minority mindset fans 2 free stocks when you invest with them. All you got to do is open up a free account and you get your first free stock, and you get your second free stock valued at up to $1,400 when you deposit $100 into your account. So if you want to learn more, open your free account and start investing. They don't charge you a penny to make a trade. I got the links to where you can do that in the description below. But before you just jump on some random opportunity and start buying shares of something because it's hot, please, please, please do your research. Now, as you already know, investing has risks. You are never guaranteed to make money when you invest. You might even lose money. So make sure you do your own due diligence and don't just blindly listen to a random guy on YouTube. The people that make the money, and I mean the real money, the real wealth in the stock market, aren't the people that gamble. It's the people that do their research, that invest in companies for the long term and let these companies build them wealth. Jasprit, that's no fun. How about I put some guacamole on your potato? Then would you play? Here's one of the simplest things that you can do. Make a list of 5 companies or funds that you want to own. Make sure that these are strong companies that aren't on the verge of bankruptcy. Then, every time you see this company or fund that's on your list drop big, I don't want you to panic. I want you to buy more. That's it. When it goes up, you hold. This way, if we see the stock market come back down, which there's a good chance of that happening because we have so much volatility in the stock market, you'll be okay because you're buying in phases. You're not trying to perfectly time the market or time buying any of these companies or funds. You're buying in phases as it comes down. Generally, you shouldn't even be worried about selling right now. But if you see a massive gain very quickly, like you see one of your companies or funds grow by 50% very fast, then yeah, maybe you want to take some money off of the table just to lock in some of these quick profits. That's what I did. Some of the investments that I made during the March crash already doubled, so I took some money off of the table because it is not normal to see investments grow that quickly. My goal isn't to make short-term profits. My goal right now is to accumulate assets and investments when they go on sale. So if you see your funds or investments go on a big dip, use that as an opportunity to buy and accumulate assets at a discounted price, because these are things, assuming they're strong, that can make you wealth over the long term. This is what financial education is all about. Knowing how to use your money the right way, that way you can build your wealth. And if you're looking for an easy way to up your financial education, remember we have a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get a free ebook and start reading our financial education emails by clicking the link up here or by clicking the link in the description below. By the way, our financial education emails are different from our financial news emails. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you're wondering how you can refinance your mortgage and save the most money on your refinance, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.